I want to start by thanking you all for coming to this cash clash that is managed by Achieva Credit Union. We'll go over some disclaimers as we go through it, but this is going to be optimizing your cash flow through digital solutions. So we're going to be specifically digital products that we're talking about that you may get from your financial institutions, credit unions, commercial banks. We're going to go through all of those. We're going to break down the pillars. We're also going to break down the products to go into each category so you understand the ones that are out there. And just like I spoke to Ryan, if you have questions as we go through it, just feel free to ask those. We'll answer them as we go because I don't want you guys to hold them to the end. There will be a question and answer sort of session at the end, but I don't want you guys to forget anything. So feel free to ask as we go. So again, I want to welcome you guys to this cash clash from Achieva Credit Union, optimizing cash flow. So we're going to go into what cash flow is. So firstly, I just want to briefly introduce myself and who I am and where I've been. So for the past 12 plus years, I've been working at different financial institutions, specifically in cash management and treasury management roles. I've done everything from operations to being product managers for treasury operations. I've been on the side of sales, so I understand it from a perspective of the business and the financial institution talking to each other to get to that common ground for what products are right for them. I've been on the back end when we talk about implementations with new vendors, new software, and launching new products. Currently, I'm at Achieva Credit Union, where I'm the treasury manager. In my basically responsibilities, what I do is I work to see where Achieva's at and where we want to go, and I help get us there for our businesses. So a lot of the products that if you were to go look up Achieva Credit Union, such as Positive Pay, which are fraud mitigants, which we'll get to, you'll see that Achieva is growing just as the other financial institutions are growing. And again, you're going to hear the word financial institution a lot. Don't think I'm just speaking of credit unions, right? Commercial banks, because we'll go through a disclaimer. I'm not here to sell you guys products. I'm, simply representing Achieva through this event. So you're not going to hear me pitching you to why you should bank at Achieva Credit Union, or why you should use our products over another commercial bank. It's simply for educational purposes, and we'll get down to that. The actual Achieva Credit Union that I want to speak to, Achieva Credit Union was founded in 1937. So it was founded by 11 teachers. It was actually titled the Pinellas County Teachers Credit Union. They actually raised money themselves, right? You think about 1937, what was going on. It was the tail end of the Great Depression. The economy hadn't fully recovered. So these 11 teachers pooled their money together, a total of $99.25, and they loaned it out to the first teacher, one of the first members. And we'll get into what the difference is between credit unions and what isn't. Of course, that original borrower paid interest, and then they worked amongst themselves to help each other with their situations, financial, their families. And then that sort of foundation for what Achieva was discovered on is what we still are today, which is banking for good. That is the motto Achieva goes by. It's banking for good. So Achieva Credit Union, starting from those humble beginnings, they haven't forgotten where they come from. They've expanded to now 27 branches. So whether you're all the way up in Hernando County, which is our newest branch in Spring Hill, all the way down into Naples, which is a couple years ago, and then we're all the way as far as east, we're in Hillsborough County. We're always expanding, so you can look at new locations that are coming in the coming years. Typically, Achieva likes to stick to about 2 to 3 branches a year that they open to give our community the footprint they need to do business, do personal banking. All of those matter to Achieva. But going into Achieva, I do want to just give this disclaimer here, which is, again, this is for educational purposes only. We're not looking to sell you any sort of product. We're looking to inform you, and then if after conversation, we do have commercial banking relationship managers, what we call CRMs, and you can speak with them. They go by market, so depending on your area, right? You would speak to one of them, whether it be loans, treasury. Eventually, if it was treasury, it would get to my side, and we would work on what your specific request is. We'd analyze statements. We'd look at what works best for you, right? Because we don't want to just give you products that maybe aren't right for your specific needs. We go over that. We'll review your current cash situation, make those recommendations. But again, we want you guys to do your research, speak to your accountants, your bookkeepers, whoever you may have in your business, if it's family, if it's anyone else, just work with them before you make those decisions. And if it's working with someone at a financial institution, speak to multiple. That's my recommendation. Don't always put your marbles, your cash in one financial institution. You want to split it up, right? You can get better deals at other financial institutions. Unfortunately, that's just the way of the business. There's not a straight shoot for pricing. There's not a straight shoot for who you're going to work with. You could have a better experience at one. I say go with the better experience, the one that fits your lifestyle, your ethos of your brand. Go with those. Those are the ones that you're going to more align with regardless. And again, if you need those numbers for who we talk to, I can provide you with who would be your research. I can even put you in touch with them. So I quickly want to just ask, what does cash flow mean to you? I know you guys are, you work for businesses, you own your businesses. What does cash flow mean to you?
Money coming in, and when you need it, to send it out where you need it, when you need it.
No, that's great. It's what it is, right? We're going to break it down more granularly, and we're going to see exactly what it is. So I thank you for that, that specific explanation. We're going to get into 3 specific topics that we're going to talk about. So the first topic, or all 3 topics, we're going to talk about the movement of money in and out of your business, like you stated. That's probably what most businesses and individuals are going to look at it, and when they see, I need cash flow, I need stabilization, that is what it is. Collecting money, receiving money, payables, receivables, etc. That's what most balance sheets are going to look like, right? We're going to dive deeper into how you can make your money work for you and how you can protect your money. The key to solvency and operational efficiency, that's very important, right? Every business needs cash to operate. It may be smaller for others, larger for some, but at the end of the day, if you're not having great cash flow cycles, you're going to struggle, whether that be with collecting or that be with dispersing. And we'll go through how the digital solutions can make that easier for you. And then often it's more critical than the day-to-day operations, right? You run your day-to-day operations and you think, okay, I've gotten from 8 to 5, my day's done, but your cash is still sitting there, right? How are you going to get it out to your employees? How are you going to get W-2s created for your employees? How are you going to collect funds that you need? These are all important questions that we're going to answer in this session here. Okay, so again, this is the basics of cash flow. You're absolutely correct. That is the basic of what anyone is going to give us. We're going to get into the finer details of what actually is the foundation, right? So cash flow cycles, we're going to talk about 6 of them. We're going to specifically explain what they are. So of course, we talked about receivables, which is cash in. Okay, you need cash to come in. If you own a restaurant, right, your patrons are going to pay you. That's your cash in. You may have other ways that you're going to collect funds, but there's a balance of what your goods are going to cost, what your employees are going to cost, etc. And when you pay out to your vendors or employees, we're going to talk about payables, which is cash out. So this is the easiest way, especially when you're dealing with commercial relationship managers and treasury sales officers. You want to speak to them in these terms. You're immediately going to get more respect at the table because they're going to know what you're talking about. You're not going to be able to be sort of bamboozled into products that you don't necessarily need. Now some of the others, right, we're going to talk about liquidity, cash positioning. So if you have an account that has excess to say $50,000 or more and it's just sitting there idle, there are ways to put that money to good use. Earning interest, putting it into liquid solutions that you can use. It's not going to lock them into what like CDs are. It's not going to lock them into lending or putting them elsewhere. You're going to have that to be able to use whenever you need it. And we'll talk about what those products are. You have controls and fraud mitigation. We're going to split these two. So controls are how you manage your funds, how you manage access to your funds. And we'll talk about what some of those features are. And then you have your fraud mitigation. So together, these are what we call cash secured. And especially with fraud on the rise, digital fraud specifically, you want to be able to safeguard your accounts. And we'll go into what those specific solutions are for you and what may work best for you. You have your reconciliation. So this is specifically how you're going to make sure that what you're sending out and what you're collecting, everything balances. So think credits, debits, okay? We want to verify what is being done to your accounts, and you want to make sure that it's accurate. Okay, you may have an accountant or a bookkeeper that does this for you, but that is essentially what they're going to do. They're going to verify that what is occurring is valid for you. And there's tools that you can use outside of treasury products too, like accounting software. Then we have data. Data is going to be probably the most advanced that we're going to talk about today. Some of these you're not going to use. There is, basic data such as reports. Right? You can get those reports. A lot of software and systems from bank platforms offer these. You don't have to go out and search for third-party solutions. There are third-party solutions, and we'll go over the more advanced ones. But essentially, data is something that usually larger corporations are going to touch. But you can run basic reports to your banking platform, and if you can't, I would recommend looking at other financial institutions because typically that's included when you have a business operating. They're going to allow you to pull reports such as your cash balances, your cash positioning, and you can do that through multiple entities and multiple accounts. And it should be free as well. You shouldn't be charged for that specific service unless you're doing the more advanced like sort of digital or server based, which we'll talk about. So we're going to talk about controls. Okay, so control, like we stated, this is where you're going to manage your account. We're going to start with business online banking because I know it sounds sort of arbitrary to talk about something so simple, but it is probably the most important thing that allows you to see where your accounts are, where your cash is, and what is actually occurring on your accounts. Business online banking is also where you're going to manage permissions for your employees or your sub-users, right? If you have a staff of 10 and someone helps you with your day-to-day cash handling, they're going to have access to your business online banking. That's where dual controls and permissions come into play. Say, for example, you have an accountant and they typically do your disbursements. You want to set up controls on them to where maybe they can only draft the transaction and you have to approve. Or maybe you want them to approve and you to draft. Or you can have multiple staff set that up. So in a way, it's a control mitigation product, but it's also, it's a fraud mitigate product, but it's also a control product because you're managing who has access, when they have access, and there's a bunch of reports you can use such as audit trails. You can check what's being done. So you're going to be able to monitor your account and work that way as well through that control. Account reconciliation that we just discussed, this is very important. Okay, if you're not using an accounting software or you're not using an accountant, there are systems at financial institutions that allow you to just reconcile your account or accounts in two ways, partial and then full. So a full is going to give you that full sort of weight behind it that an accountant would. Partial is going to be a little bit smaller. It's going to give you sort of a summary. It's going to tell you how many debits, how many credits. It's going to tell you your cash in, your cash out. It's going to give you that position. You can reconcile your accounts that way. Some banks charge for this, some do not. Okay, so it's and I can give you recommendations if you want to speak to anyone, but these particular products, those two will start off on the controls. This is one of the more advanced products. I don't suspect many of you will use this, but the deposit account control agreements, I want you to understand this is an agreement between a lender, a borrower, and a financial institution. Okay, this is a legal agreement that allows the lender to deposit the funds into a specific account through a financial institution that they're partnering with. So the borrower is sort of locked in. It could be due to collateral, but that is a control agreement. It's very advanced. And typically, it's when they have borrowers that have certain types of collateral, they may try to stick them into what we call a DACA. It's managed by Treasury, so nothing to be worried about. You're probably not going to hear anything about that, but it is important to know that they may discuss it if you're looking for lending opportunities. Zero balance account. So we call these ZBAs. They're a specific type of sweep. So say you have 5 accounts, okay, and you want to have them sweep automatically through the night. You don't want to have to manually transfer funds. This is sort of a cash sweep, but instead of it being a target balance, we're going to have it at $0. So say you have a receivables and you have an expense account and you want it to all zero out into what we call a master account and say that's your operating account. You can make that automatic through what we call a ZBA sweep. Some businesses use it. It can be multiple entity or multiple corporation if you'd like, but it is really for you to choose what works best for you. We will have those discussions with you when we look at your accounts. If you're doing a lot of internal transfers between the accounts, we may recommend a zero balance account or a simpler cash sweep to help you maintain the balances without you having to manually do it every day. You can always manually do it. There's nothing wrong with that. But if it's a burden because you're transferring quite a bit of funds, we can talk about that sweep, and we'll go into other sweeps as well. Now, receivables. Now, of course, receivables is one of the main two pillars that everyone really talks about. Receivables are going to be collecting funds in. The first one we're going to talk about is the ACH collections. Okay, so there's many options with ACH collections. So when you get your payroll now, or when you send out an electronic payment, it's going via the ACH network. Okay, the ACH network is not run by the Federal Reserve. It's a non-governmental organization. All right, so it's separate from what we call the Federal Reserve or the FedNow system, which we'll talk about with wires on the payables. But ACH collections allows you to collect from your vendors, your invoices, your particular individuals or businesses. There's several options. You have what's called same day, which means if you are before cutoff time, you can collect funds the same day. It'll deposit to your account same day. You have standard, which is basically standard is next business day becomes the first availability. So if you do it, say today, you could have it go tomorrow. Now, typically there's pricing differences between same day and standard. It could be $1 extra per ACH transaction. That's a discussion to have between your bank and your sales officer. And then there's RTP, which is one of the newer products called real-time payments. Real-time payments is offered by, you may be familiar with something like Zelle, right? Oh, yeah. Zelle is it's consumer to consumer, but a lot of businesses want to use it. A lot of financial institutions try to steer away from it because there's a lot of tax havens that are going through it. They're doing their payroll through it. It's instantaneous as well, as long as you have a high enough limit. But most banks are going to be moving to RTP for businesses if you want instant payments. Okay, lockbox. So if you process or receive a lot of checks or you have a lot of payments and you have the bank automate that for you, they offer a service called lockbox services. Lockbox think of homeowners associations. Okay, they're going to be a heavy use of lockbox because whether you pay with a check, whether you pay on their online website or third-party site, they're going to collect that payment for you, and then we're going to process that, and then we're going to send them an accounting file that balances what we processed for them. Okay, so we take out all of the work for processing the checks or the digital transactions for businesses. It's not just for homeowners associations or property management companies. A lot of businesses that receive a lot of checks utilize these services, and then we process these. So we'll open the mail, we'll scan the image, we'll process it, we'll make the deposit to your business account, and then we'll send it directly out to them. And then you'll be able to upload a file that matches your accounting software that tells you who paid, who didn't pay, so that way you know who's late, who's not late. Merchant services. So I know everyone's familiar with merchant services. You go up, you pay with your phone, Apple Pay, you pay with credit cards. Merchant services is vital. It's going to be vital for probably the rest of humanity. Obviously, as you guys are aware, you started where you pay with cash, then you can pay with check. Now there's card, credit, debit, and now there's digital such as Apple Pay, Samsung Pay, Google Pay, etc. All of these are what would fall under merchant services. My best advice when you're dealing with even an independent, whether it's Square or Clover, or you're dealing with the vendor that your bank uses, talk in terms of monthly contracts, not yearly contracts. Because if you get locked into a yearly contract and you find you're paying more through the interchange and those sort of fees, you want to get off of it. They're going to make you pay a cancellation fee that's going to be quite substantial, and your bank is not going to be able to waive that because it's through a third party. Almost every bank doesn't have their own merchant services. It's all through vendors such as Heartland, and there's a ton of them. Even some partner with Clover or Square. But talk in terms of months, not years. That way, if you decide to cancel it, there's a way for you to get out in months and not years. Remote deposit capture. So not to be confused with what we call mobile deposit or mobile remote deposit, which I'm sure you guys are familiar with taking pictures of your checks. Mm-hmm. Remote deposit allows you to have a physical machine at your desk. So not every business is going to use it, but if you are a check-heavy business, you can have what we call a remote deposit machine at your office or at your home office, and you can run those checks through the machine. If you're ever interested in these products, I just want to do a little bit of educating, which is there's two types of scanners. You have what are called single feed and you have what are called multi-feed. Single feed means there's one tray in and one tray out, meaning it goes in the same way it comes out pretty much. So you run one check at a time. The multi-feed scanners have what are called DPMs, or deposits per minute. These allow you to capture up to 50 as a minimum and all the way up to 100 at a sort of per minute. So you can set more than one check-in on the tray at a time, and it will just pull one in at a time, spit it out the tray, and you don't have to worry about waiting for one at a time. If you utilize this service, please note that you can also buy your scanner outright. Okay, you're going to get charged no matter what through a financial institution for what we call an RDC module fee. But if you want to purchase your scanner off-site, you can go through certain vendors such as Benchmark Technologies, and you can avoid dealing with a fee from your bank, because sometimes they may get the scanner of what we call a warehouse discount, meaning they're paying $40 for it, and then you're getting charged, say, maybe $50 a month for the RDC scanner. So you want to have those discussions with your financial institutions. There's no difference of you buying your scanner outright, because the service that you use it for, the time frame, you're going to pay for the cost of what they paid for, even if they bought it full price. So just be aware of that when you're having these discussions. Now, probably the most important that we're going to talk about is your payables, right? Everyone knows they need to disperse funds, they need to send funds out. ACH disbursement is the counterpart to ACH collections. So instead of collecting, you're sending money out. In both collections and disbursements, I want to make a differential thing for you, which is you can send out single payments, or you can send out what we call full-on batches. Batches can have thousands of individuals. So if you know, for example, you have 10 people on your payroll, if you know what you're supposed to pay them, ACH disbursements is what you want to use. If you need W-2s, you need taxes, withholdings, benefits, you're going to want to work with the next one, which is payroll and workforce management. A lot of financial institutions market this as payroll, but please note that if you're using, say, Excel or an accounting software, and you know what your withholdings are, you don't offer benefits, ACH disbursements is going to be cheaper for you. If you're using payroll and workforce management, you're going to want to talk to them again about month-to-month contracts, but you're also going to discuss with them the workforce management, which is where you're going to be able to run backgrounds on individuals. You're going to be able to do your payroll still digital, just like ACH, but it's going to be done through your payroll company. And typically, banks partner with a third-party vendor for this as well. You can go outside of the banks, and it might be cheaper for you that route, depending on who you're talking to. But I recommend having these conversations. But again, the workforce management, I can't stress enough. We get a lot of businesses that want ACH, but when we get down to the nuts and bolts of the conversation, they need benefits, they need deductions, they want W-2s. And ACH disbursements in the ACH network is just a way for you to move funds in and out of accounts. Purchasing cards, so what we call P cards, they're for businesses. Now the purchasing cards, a lot of financial institutions, typically they have what are called line of credit backed. So you'll have a line of credit, so say you're a business and you have a line of credit or a revolving line of credit, you can apply for a P card. So typically, you take the funds that you're dispersed, and then you would put them into your account, and then you would have to spend them via ACH or check. But this way you get a purchasing card, and it looks like a credit card pretty much. It is in a sense, but it ties to your line of credit. Okay, so the line of credit itself is very important when you talk about P cards, but it allows you to have multiple cards for your employees. So if you're in the construction business, or if you have to make a big purchase, like I know you do barbering and salon. My wife used to work at Salon Centric. So you could use a sort of a P card if you had to go and you knew you had to buy, say, $40,000 worth of equipment tied to a line of credit. You don't have to worry about dispersing those funds or transferring them to a different account and writing a check out, or putting it in your checking account and then swiping your debit card. But you can talk about purchasing cards. They're great for businesses. And then wires. So I put wires on the payables because I want you guys to understand it does allow you to send funds out domestic, internationally, and in foreign currency. But I want to make it clear that when you're talking about secure payment networks, wires incurs the most fraud. Okay, a lot of times when fraud occurs with wires, it's typically they'll send you a wire and they'll say, I gave you too much, send me back 5,000, and then the wire bounces. So it's sort of like check kiting, but it's wire kiting. They're gonna basically send you a wire, ask for you to send it back, and it could be legitimate businesses that you're doing business with. They've just been hacked and they want you to send this, but at the end of the day, there's no money, so you send the money back, it bounces, the financial institution finds out because it's delayed just like the checks are, because it goes to the Federal Reserve System. But they are digital. You can do domestic, international, and foreign currency. I always recommend that if you're buying equipment or sending money overseas in a foreign currency or even in US dollars, verify what the exchange that they're asking you to pay, because they may be trying to get you to pay for what the international financial institution or the intermediary bank is going to charge you in between that. So think of like interchange fees when you swipe a card, that business is going to pay a fee. International wires is the same way. So you want to have those discussions with those vendors that you're talking to, because they may say charge you that fee, or they may not. Some banks don't charge that fee, some do. And then in the conversion rate, if you say you owe 100,000 and you're paying 100,000, and it's in say the Chinese yuan, you are going to end up probably paying less or paying more. Liquidities. So with liquidities, like we talked about, this is excess cash. So if you have idle cash, that's the busy hands that you need to make it do something for you. Whether it just be parking it in a money market account, or talking about what some of these sweeps are. We're going to talk about them. So CDARs, insured cash sweeps, repurchase agreement, and even line of credit sweeps, right? They're all going to be automated for you, but the three that are going to earn you interest are the CDARs, the insured cash sweeps, and the repurchasement agreement sweeps. So CDAR stands for Certificate Depository Account Registry Service. Okay, this is going to be like your CDs, but essentially what it does is when you apply, say, 250,000 or more into a CD, or even less, it's going to disperse it amongst what we call a deposit network of other financial institutions. So it allows you to earn higher interest, typically than what other CDs may offer, but it also insures your account and protects those funds even further if that financial institution were to collapse. Same thing with insured cash sweeps. Insured cash sweeps allow you to send money automatically to what we call basically a insured cash account. That account is off-site on a deposit network, but you can pull on those funds whenever you need to. They earn higher interest. When I say higher interest, sometimes I've seen them upwards of 5 to 6%, depending on what you have, which is going to be far greater than what some money market accounts offer you. What do you get out of it? You get protection. Say you bank with a commercial bank and they're being acquired or they're folding, right? We all saw that with the California Silicon Bank a few years ago. A lot of money was lost and tied up because the FDIC had to get involved to ensure anyone's deposits that were 250,000 or less were met. Anything over that, technically, if a bank fails, you could lose out on. That's where the ICS and the CDARs come in play, because even if that bank were to fold, your funds are at other financial institutions that you have not opened accounts for, but it's on this deposit network, so it's insured. So you're going to earn interest every month, you're going to get paid out that interest every month, and it's going to be quite substantial. The line of credit sweeps, again, if you have a line of credit, the line of credit sweep can be set up two ways. It can be set up as general overdraft protection to protect the checking account, right? It'll pull down when you need it, or it can also be set up to basically reciprocal. It'll cover this account, but if this account is ever excess over what we call a target balance, it's going to send the money back and basically pay down your line of credit. So it works both ways if you want it to work. Again, most will use it for overdraft protection, but a lot of them, when you have revolving lines of credits or multiple through entities, they may want a line of credit sweep for you. Repurchase agreement sweeps, what we call repo. Those specific sweeps are going to work on treasury bonds. So for example, if you sign up for a repurchase agreement, your financial institution is going to open a specific account type. They're going to partner with another deposit vendor of theirs. Could be, if it's one of the bigger banks, they may have it built in, but they're going to purchase, basically you're going to set a target balance. They're going to every day buy that equivalent of what we call the safest bet investments, which are treasury bonds, right? When they buy those treasury bonds, they're going to basically add interest to it, sell them back, and then buy every day. So it covers that. It's not a very popular product. Financial institutions will talk about, maybe not in front of you, but it is a very expensive product for them to host and sell. But it is another way for you to earn higher interest on your idle funds if you don't need it. And it is liquid because, again, it's bought back the same every day. So you're going to have that target balance, you're going to earn interest, and you're going to be able to put those funds to good use. So liquidity is very important when you have funds that are just sitting idle, right? If you need it for a specific project and you set it aside, make it a money market account. If you know you're not going to be pulling on it, money market accounts don't cost anything. You can have a sweep. You don't need to have a sweep, but you can earn those higher interest than what you normally would get in a savings account. Even in an advanced checking account has a higher interest. And I would recommend shopping rates. Look at other financial institutions. You may find one that has 3%, and the next financial institution you look at has 5%, right? There's nothing that holds you from going from one to the other to earn higher interest, okay? Fraud mitigation. I would say these are the most important products we're going to talk about today. You want to prevent fraud from occurring on your accounts. Okay, you can do that through, like we talked about, the business online banking, dual controls, permissions. But these are the 4 that you're going to want to, I would say, at any cost, have. The ACH debit block and ACH credit blocks, they are full blocks. You do not need to have these 2 down here, which we'll talk about. But the ACH debit block and the ACH credit block are full blocks. You're going to block all credits or block all debits to your account. This is vital if you're going to use these to control the cash in your account from who's debiting you and who's crediting you. Think about escrow accounts or IOTA accounts. And they may want to use blocks because they're going to block the full transaction spectrum that they're looking to stop. ACH positive pay and check positive pay, I wouldn't say do this or do that. But these 2, I would recommend if you have any business account, bank with a financial institution that has these products and offer these either as inclusive or low price, because the service is going to allow you to approve and set rules and add data for every check and every ACH that clears your account. Now, it's not going to mess with your if you use a business debit card or anything like that, but these 2 products for preventing fraud are vital for you to understand. The ACH positive pay is going to allow you to create what we call ACH rules. So every ACH transaction has an originator ID code, and that ID code identifies who is debiting your account. And it'll tell you who it is. So if it was Duke Energy, it'll tell you it's Duke Energy. You can add rules so that this particular entity can debit you, and you can set variations like they can debit you from between this and this, or they can debit you only up to this amount. Or you can have a rule that basically says, I trust this vendor to debit you whatever amount they want, but that's up to you how you want to process that. That's for ACH positive pay. Check positive pay comes with 3 different options. You have what are called payee check positive pay, you have reverse positive pay, and standard positive pay. Standard is it's going to match against the system for what you upload. So if you cut 10 checks today and you don't add them to your check positive pay, and then I go to try to cash one of those checks, it's going to flag it in your system the next day to say, yes, I want to release these funds, or no, I do not want to release these funds. It's very vital to preventing fraudulent items. So even if your account is compromised, right? A lot of businesses, when their accounts are compromised and they don't have positive pay, they have to close their accounts. You have to change everything with your vendors online. You don't have to do this with positive pay. You can stop it right when it occurs, and it's in your hands or your employee's hands, and you can either have it to where it's inclusive, where you add check data, and if it matches 100%, it'll approve it, and you have it where if you have a rule list, it will approve it. Anything outside of the scope of what you approve the system for, it's going to send what are called exceptions, and those exceptions you'll be able to decision either pay or return. It'll be up to you, and it's the ultimate control. And if there's any product you walk away and you sign up for, these are the 2 that I would recommend more than anything. Now data. So some of these, again, these are going to be very advanced products. I don't expect you guys to probably have these, but if your business wants it, you can have it. A lot of these financial institutions offer these. Some of these you're not going to find at your smaller commercial or some of the credit unions. but your larger regional are going to have these. So when we talk about ACH API, or Application Programming Interface, you probably hear it all the time on the news, or tech companies talking about API access, right? But this is to access the NACHA network and your bank. So it works, basically it would allow you to access the API through a connection with your bank, so you don't have to do the bottom, which is SFTP, which we'll talk about. It's going to be automated directly through the NACHA network. The BAI, or what we call Bank Administration Institute, there's current day and prior day. So current day, of course, is your cash and balances that day. Prior day is the past. But you can have these set up also to be electronically sent to you. A lot of times the reporting that you have online will offer you a BAI export for certain accounts, and you can import that into your system. So think of this as you have an accounting software and you want your financial institution to just give you the data in a language that it can understand. That's BAI. That's one of the languages. Okay. You can utilize these or not. It's up to you. A lot of businesses don't utilize the BAI, but it's there for you to use if your system understands it, right? Because again, it's going to be in a BAI extension, right? So it's not like an XLSX for Excel. It's BAI. Electronic Data Interchange, or what we call EDI. It's another way for the data to get into your accounting software. So it makes it easier for it to read the transactions and to reconcile your accounts. And a lot of times it's delivered via the same systems that Positive Pay is in. So a lot of financial institutions will use a platform where you do your decisioning for your Positive Pay and ACH Positive Pay. They're going to allow you to pull your EDI files from there. Okay, and you can automate these two depending on who you're working with. And then lastly, I do just want to touch on what we call Secure File Transfer Protocol, or SFTP. So think of this as a more advanced version of what FTP is. So just take out the word secure. But SFTP is server to server. So typically you'll sign up for a vendor, and then you're going to have either your ACH, Positive Pay, cash letters, etc. They're going to be sent via the server in two ways. You can do either what's called a push, or you can do what's called a pull. A push is your server is going to push it to the bank, whereas a pull is the bank is going to pull it from that server. So when you sign up for these, your particular vendor will get involved and our IT gets involved. And they create this server connection for these files to automate. So every time you drop, say, your what we call a NACHA file, so ACH compliant, it's going to be placed in this folder, and then it's our bank or the financial institution is going to come through and just automatically pull it, or a push, your vendor is going to push it to the bank. Again, not super common, but these are out there for you to reference at any point if you choose to do so. So just know they're out here. These are the most advanced products that you're going to talk about. Usually these are multiple entity, we're talking 10 million or plus in revenue or cash sitting. Those are the businesses that are going to talk about these, but they are products to look at. So with that, I just want to bring us back to what we have as the actual cash cycles, right? We talked about cash in, right, which is our receivables. We talked about cash out, which is our payables. We talked about a liquidity, right? Cash positioning. Make your money work for what you have. Even if it's just 5,000 or 10,000, you can earn more interest on that instead of just letting it sit idle in your checking account, right? Have those discussions with your treasury operations team, your sales managers, your relationship managers. It's very important. Fraud mitigation and controls we talked about. So that's securing your cash, right? Preventing fraudulent transactions from occurring on your account. And then of course we've got our data, which is the information, right, for your cash flow. So together all of this is the complete cash cycle that your business goes through. You may not realize it, and you may just spend more time on receivables and payables or your controls. You may not be using any liquidity solutions, right? The trick of the trade is financial institutions, credit unions, commercial banks, they're not going to tell you to put your money into a performance money market account, right? Because at the end of the day, they're paying interest. Okay, the way financial institutions work is, they borrow funds from the Federal Reserve at a rate, and then they're lending them out to you at a certain rate. So if you have $100 million in an account at a specific branch, you go there to request all that out, they're not going to have that kind of cash on hand, okay? Because they're lending money out, they're paying the Federal Reserve the rate that they borrowed the money at. So it's important to understand when you're looking at this that this cycle represents your business at some level, whether it's a startup, whether it's a small business, whether it's middle market, commercial, whether it's a conglomerate. This is a cycle that every business is going to follow. The services that they use, it depends on the conversations you're having, the software they're using, depends on what they prefer, what is integrated into their networks, what works best for their needs. That is a decision to be made between your staff, so your CFOs, your accountants, that team, and then your leadership with your financial institution. I want to just stress that this is the cash flow cycles and where we want to get to for you guys. All right. Now, action steps. This is what I would recommend doing no matter the size of your business. Go evaluate your cash flow process now. Based off what we discussed today, look at the funds. Do you have idle funds sitting around? Do you have issues getting your receivables into your account? Do you have issues paying your disbursements, paying your vendors? Right? Are you sending checks and maybe it takes 1 month, it takes 3 days, 1 month, it takes a week, right? Are you being charged little fees for that? Look at that process and see what's going right for you and what's going wrong for you. Meet with your financial partners, okay? If you bank even at the biggest bank, Chase Bank, every financial institution is going to have what's either called a business banker, a commercial relationship manager, a treasury solutions officer. There's going to be someone there to answer all your questions beyond the branch managers and the tellers that you may deal with for cash transactions. You're going to want to talk about that. Talk about what accounts can you open that maybe can help you get to where you want to be, right? Have them sit down with you. Like, let's look at your business plan. Let's look at what your goals are for your business. How can the financial institution help you get there? Whether that be through lending, whether that be through streamlining the digital solutions, right? Whether it be just analyzing your accounts and looking at the cash flow cycles. That is what your financial institution should be there for you. They shouldn't just be transactional, meaning they shouldn't just say, I sold you ACH, here's how you use it, just use it, we're going to charge you for the usage that you have. Okay? Negotiate based off your relationship. Don't just assume I have $5,000 or $10,000. Have a conversation with them. Talk about how can we get into proper pricing based off what my model is. Maybe it's not right that I have a full suite of treasury products. Maybe it's right that I only use one product right now. Have those discussions. Prioritize the automation and security of your funds and your operations. Positive pay. I can't speak highly enough about it. If there's nothing you take away from this presentation besides protecting your funds, check positive pay, ACH positive pay. Some financial institutions offer it with the business account you open. Some charge. I've seen fees from $20 to $40 on a monthly basis, but there is no usage fees. If there are usage fees, such as you had 100 exceptions for the month, I would probably negotiate that or stay clear of those relationships, because at the end of the day, they want you to protect their funds. Because if you have fraud, that falls on them to pay out and make good on that. But you also want to prevent fraud from occurring, because at the end of the day, it could slow down your cash flow cycle. It could slow down your disbursements, it could slow down your collections. So we want to make sure that your accounts are always operating efficiently. And then lastly, stay informed on payment technologies. I would recommend, if you have time, look at natcha.org. Go to NACHA. NACHA is the regulator for the ACH network. Just look at some of the forms they have. They always have virtual sessions you can join. You can have conversations with them. Find out who your business, your bank platform is. Okay? If it's someone like Fiserv, FIS, these are the large financial corporations. Sit with them. Ask who your vendor is. Ask what they do, what you're contracted with. These are things you can know, and then you can go to those websites and learn more through the vendors themselves. Okay, I can't speak enough about those. I've had so many businesses ask me, who do you work with? And then they go to them and they have their own conversations. They may reach out, but learn more about that. The last thing I want to mention is stay tuned for RTP and FedNow Reserve. Not every financial institution offers it. But RTP is the real-time payments, and the Fed now is through the Federal Reserve. It's the equivalent. So the Federal Reserve is beginning to compete more directly with the ACH network. That's going to be good because it's going to drop prices down as it becomes more competitive. Federal Reserve wasn't as competitive with the ACH network because they offered wires, checks, etc. So now that they have their own sort of equivalent, it's going to become better for you. And instant payments is the future when we talk about disbursements. And then lastly, I want to personally thank you all. I know there's one slide after this, but I want to just sort of open up the forum and see if you guys have any questions based off what was presented. I know it's a lot to digest because it's not just looking at it in terms of payables and receivables, right? I did break it down between the cash in, the cash out, securing cash, cash optimization, but are there any questions about the products that you saw, the actual cash cycles? You guys have any questions or concerns based off the data that was presented?
I don't.
No.
Okay. And I know this will be up on the site eventually for you guys to reference at any point. Again, I am, the Treasury Management Manager at Achieva Credit Union. So if you do have questions or concerns, you're more than welcome to reach out to me, and I'll provide my contact information before we sort of disperse. But I just, again, want to personally thank you for participating in this. It's important. Achieva Credit Union, right here in Dunedin, Florida, for its entire history, right? There's a whole street down here named Achieva Way. Our headquarters are right here. Our whole community is right here. We are dedicated to being for this community. And that's why we put on these classes to help businesses, whether you're a conglomerate that owns 10 businesses, whether you're a multi-entity corporation, or whether you're a startup or a small business. It's important to understand, because if you don't have these conversations with your commercial bankers, you may not know some of these solutions out there exist. You may think your bank is always looking out for you in the best interest, but you may go to another financial institution and see that they'll offer you a better rate. They'll offer you better pricing, right? I would always recommend to put the relationship first. Maintain the relationship, because if it's just transactional, it just becomes that. It just becomes, oh, I need you because I want to sell a loan, and you need me because you need a loan, right? Let it be a relationship. Don't just let it be transactional. And that's what I'll, sort of close on. And again, if you have questions, always reach out to us. We are here to educate you beyond what you may already have. Even if you bank at multiple financial institutions, I would say speak to each of them, because you're going to find different tones of how they're discussing products, because they do have quotas at the end of the day, right? They do have a pipeline they have to work. They do have numbers they have to meet quarterly or yearly. And we want you guys to be positioned to take advantage of that, not to become sort of trapped in there selling, just products. We want to be a relationship. So again, thank you for participating and being a part of this.
Yeah.
Thank you.